Hello there, Maverick traders, and welcome to today's currency recap. It is December 15th. Okay, holiday season is in full swing. Christmas is around the corner, but that Santa Claus rally has definitely failed to materialize. Equities down considerably today, sharp break in a lot of risk markets. The dust has settled after the FOMC meeting, and the market has decided they don't like the aftermath of Powell's hawkish comments. Taking a look at the S&P 500, we got to within 20 S&P points of my upside target of 4120 in the cash basis market, but if you're looking at futures, my target was hit. I pointed out this channel last week and said a break outside of this channel would probably prove to be bearish for equities, and so far that's followed the script. Over in VT, we've also hit my upside target of 90.70, and I'm looking for lower in VT as well. Shouldn't be a surprise there. Crypto, I said, that area between the moving averages is quite dangerous. And indeed, that's exactly what we've seen. We've tagged that 50-period moving average, and now the daily candle is looking quite scary. My expectation is that crypto is going to break to new lows at this point. I could be proven wrong. There's definitely some decent technical support in between, the new lows and where we're trading right now. But that is my expectation. We will make new lows in crypto. Okay, so given the technical parameters that we're working with here, I'm going to give the market outlook a 0. We're below the 20-period moving average. We're above the 50, but the slope is neutral. In terms of the calendar, tomorrow we've got a lot of news coming out of Europe, inflationary data coming out of the Eurozone and Great Britain. And then overall in the US, we also have inflationary data coming in, taking a look at flash services PMI. Moving on now to currency analysis. Okay, so this is where things get interesting. We're not going to spend too much time on the cryptocurrency side of things because they've more or less all moved in unison today, which is to say sharply lower. But on the fiat side of things, it is a little bit more of a mixed bag than you might expect. And we're going to take a look and I'll show you exactly what's going on there. So the dollar clearly outperformed. What's interesting is that the Aussie clearly underperformed. So I do like looking at continued weakness in the Australian dollar. The question is, what can we pair the Aussie against? And this is where things get particularly interesting. Euro-Aussie is a very interesting currency pair to me. If you want something that's lower volatility, then I would say something like Aussie-Swiss is something interesting, or Aussie-Kiwi, where the Kiwi has consistently outperformed the Australian dollar on a relative strength basis for the last several weeks. The big question in my mind is, have we resumed a period of sustained dollar strength, or is this just a head fake? And we're going to head over to the charts now to try and figure that out. Okay, so we're going to start off with the dollar basket here. Nice big bullish green candle here. Love to see it. Here's a fascinating phenomenon with the dollar. Momentum has just stalled. We've kind of built this range in the relative strength indicator, and we've broken above that range today. I really would want to see a break above the 50, which is the midline here on my indicator, for sustained bullish momentum. That being said, we can draw a nice little trend line off the lows here. I wouldn't say we're convincingly through that trend line yet, but it is something to keep an eye out for. For those of you who have been watching my videos, I look at wedges. This is a fairly textbook wedge. So we'll have to wait and see. We've met that downside head and shoulders target I called out. We've even exceeded it a little bit. I'm just going to make that neckline measurement once more. So you can see we have exceeded that target a little bit, run into technical support down here. And honestly, I'm curious to see if dollar bulls have what it takes to bring the dollar to new highs once more. I hope they do, because from a pure trading standpoint, I think the risk reward ratios are skewed more so in favor of dollar strength and dollar weakness at this time. Okay, moving on now to the Australian dollar. I've been talking about this channel. We've been trading in this channel for quite some time, and we're about to break below it. If we break below it, I'm looking for a test of the lows from December 2021. Swiss franc. Wow, nice big bullish candlestick, yes, but trading into technical resistance. So I expect any Swiss franc strength to be relatively short-lived. Potential double top up here. Could the Swiss franc surprise and take that out? It's possible, but when you zoom out a little bit further, you'll see why I'd be very skeptical of that happening. Every time we've had price spikes into this region, they've been rejected hard. March of 2020 and January of 2015 as well, which was, of course, around the period of the Swiss franc tsunami. Euro. Well, the euro has surpassed my expectations. Certainly, my expectation was that the euro would likely remain weak, but instead we've broken above this area of resistance, which puts into focus this next shaded area right here, which we're just trading into. So there is likely a supply of euros overhead, which means we might trade into that zone and then correct quite significantly. I mean, we've had a substantial rally off the late September lows here in the euro, late August lows in the euro basket. So, we are due for a pullback in the euro. Perhaps there's a little bit more strength left in here to test this next resistance area before pulling back. And then finally, the pound. I've been talking about how I'm bullish on the pound, but the pound has not really soared. We've broken above this resistance level and we're kind of basing right now. I'd be curious to see what happens over the next couple of weeks. But if we start establishing a trading range, between say here and here, that would not surprise me too much. This market might need to move sideways for a little bit before we get a sign of what the next bigger move might be. All right, so that's my personal expectation here. I think we're going to see a range form in the pound basket. I don't really like trading ranges unless we're at the very top or the very bottom of the range. So for me personally, I'll probably be looking to short the pound near the top of the range as we are now and get neutral as we get closer and closer to the bottom of that range. Okay, so that's it in terms of possible trades. The bottom line here is if you're looking to short anything, I'd look at the commodity currencies and the pound. And if we're talking commodity currencies, I'd say particularly the Australian dollar. And of course, my big question is, well, the dollar outperformed today, but can it continue to do so? And in any case, volatility is back for now in the Forex markets, and that means paying special mind to proper position sizing and, of course, following your trading plan at all times. All right, folks, that's it from me. I will see you next week on Tuesday, actually. So that'll be my last video to all of you before the new year. So everyone, I'll wish you a happy holidays and a happy new year on Tuesday. Tomorrow's a trading day. So, and I actually, look, I typically don't like trading on Fridays. I think tomorrow's a trading day. However, I'll be looking for short-term trades and I'm going to aim to be flat by the end of the day tomorrow. All right, folks, have a great night and I'll talk to you next week. Bye for now.